Imagine you wake up tomorrow and your bank app will not open. You try again, but it just keeps loading. You rush to an ATM, but there is a long line. People look stressed. When it is your turn, the machine says there's no cash left. Your money is still in your account, but you cannot touch it. This is what a bank shutdown can feel like. Most people think the real danger is losing all their money. But that is not always the first problem. The first problem is losing access to it when you need it most. And here is the scary part. This has already happened in real life more than once. So the real question is not just, is my money safe in the bank? The better question is, where's my cash actually safe if the system stops working? In this video, we will break it down in a very simple way. We will look at banks, cash, gold, crypto, and other options. And by the end, you will know the safest way to protect your money without panic or confusion. Now let's talk about something most people get wrong. When people hear about banks shutting down, they imagine one thing. They think their money just disappears overnight, like it is gone forever. But in many real situations, that is not what happens first. The first problem is much simpler and much scarier. You still have your money, but you cannot get to it. Think about how you use money every day. You tap your card, send money on your phone, or take out cash from an ATM. All of that depends on systems working in the background. If those systems pause, even for a short time, your money is stuck. This has already happened before. In Greece in 2015, banks closed for weeks. People could only take out a small amount of cash each day. Imagine having savings, but only being allowed to use a tiny part of it. That created stress very fast. And in a recent US bank collapse, billions of dollars were withdrawn in just one day. That shows how fast panic can spread and how quickly access can become a real problem. So here is the key idea to remember. Your money can look safe on a screen, but still be useless in real life if you cannot reach it. Now, let's answer the big question. Is your money in a bank actually safe? For most people, the answer is yes. In normal situations, banks are one of the safest places to keep your money. In the United States, there is something called deposit insurance. This protects your money if a bank fails. Right now, that protection covers up to $250,000 per person, per bank. So if your money is under that limit and your bank is insured, you are usually protected. That sounds great, and for everyday use, it really is. But there are a few things most people do not think about. First, that protection only works with insured banks. Not every place that holds money works the same way. Some apps and platforms are not covered in the same way as traditional banks. Second, the limit matters. If you have more than that amount in one bank, the extra money may not be protected in the same way. Third, and most important, safety and access are not the same thing. Even if your money is protected, you may not be able to use it right away. During a crisis, systems can slow down. Transfers can pause, withdrawals can be limited. You may need to wait before you can fully access your funds. And here is something else to understand. The system is designed to handle problems one at a time. It works best when one bank fails, not many at once. In a larger panic, things can feel very different for a short period of time. So here is the simple truth. Banks are still safe for most people in most situations, but they are not perfect for every situation, especially when you need fast access during stress. So now you might be thinking, fine, I will just keep my money as cash at home. At first, that sounds like the safest idea. Cash does not need a bank. It does not need an app. You can hold it, see it, and use it right away. If the system goes down, cash still works in many places, at least for a while. That feeling of control is why many people trust it. And to be fair, cash does solve one big problem. It gives you instant access. If banks close or apps stop working, having some cash can help you buy food, fuel, or other basic needs. In a short emergency, that can make a big difference. But cash has its own risks that people often ignore. First, it is not protected. If it is lost, stolen, or destroyed, it is gone. There is no support line to call, no refund, no backup. Second, cash loses value over time. Prices go up, but the amount of cash you hold stays the same. That means your money slowly buys less and less. Third, governments can still control cash. There have been times when large amounts of cash were suddenly made useless. In one country, most paper money was declared invalid almost overnight. People were forced to exchange it quickly or lose it. So while cash feels safe, it is not perfect. Cash is best for quick access and short-term problems, not for storing all your money long-term safely. Now let's talk about something people have trusted for thousands of years: gold and silver. When people worry about banks or paper money, they often turn to these metals. And there is a good reason for that. Gold and silver are physical. They are not tied to a bank account or an app. You can hold them in your hand just like cash. For a very long time, gold has kept its value better than many currencies during hard times. When systems fail or money loses trust, gold often holds up better than paper money. So in that way, gold can protect your wealth. But here's the part most people do not think about. Gold is not easy to use in daily life. If you need to buy groceries, pay for gas, or handle small daily costs, gold is not very helpful. You cannot easily break off a small piece and use it in a store. It is also harder to sell quickly in an emergency, especially if markets are stressed. There is another hidden risk. Governments can step in during extreme times. In the past, there were cases where people were forced to give up their gold or sell it under special rules. So even gold is not a perfect answer. Here's the simple way to think about it. Gold and silver are good for protecting value over time, but they are not good for fast access or everyday spending in a crisis. Now, let's talk about a newer option that many people see as an escape from banks, crypto. You may have heard people say that crypto is safer because it is not controlled by banks. In some ways, that is true. Crypto can let you move money without a bank, and if you hold it yourself, no one can freeze your account in the same way. That sounds powerful. But there is a very important detail most people miss. How you hold your crypto matters more than the crypto itself. If your crypto is sitting on an exchange, it is not fully under your control. That exchange works a lot like a bank. If it fails, freezes accounts, or goes offline, you may not be able to access your money when you need it. This has already happened before. A major crypto platform collapsed, and many people could not get their money back. They trusted the platform, but they did not control their assets directly. Now, if you move your crypto into your own private wallet, you gain more control. No bank can freeze it. No app can block you in the same way. But that comes with new risks. You have to protect your keys. If you lose them, your money is gone. There is no reset button. Crypto prices can also move up and down very fast, which adds another layer of risk. So here is the simple truth. Crypto can give you independence, but only if you understand how to use it safely. Now let's look at something most people do not think about. Treasuries. These are loans you give to the government. In return, the government promises to pay you back with interest. In the United States, these are backed by the full strength of the government. Because of that, many people see them as one of the safest places to store money in the financial system. They are not exciting. They do not promise huge returns. But in times of stress, many large investors move money into treasuries because they trust that promise. So in that sense, treasuries can be very safe. But again, we need to think about the real problem we are solving: access. Treasuries are not the same as cash in your pocket. You cannot walk into a store and pay with them. You cannot use them if power is out or systems are down. They are still part of the financial system, even if they are a stronger part of it. So they help protect money, but they do not solve the short-term access problem. Here's the simple way to think about it. Treasuries are good for keeping money safe inside the system, but they are not useful for fast, real-world spending during an emergency. Now let's bring everything together. At this point, you might feel a bit confused. Banks are safe, but not perfect. Cash is useful, but risky. Gold protects value, but is hard to use. Crypto gives control, but adds new problems. Treasuries are strong, but not flexible. So what is the answer? Here's the truth most people do not hear. There is no single place where your money is completely safe in every situation. Each option solves a different problem, and each one has its own weakness. Banks are great for everyday use and paying bills. Cash is great for quick access when systems fail. Gold can help protect value over time. Crypto can give you more control if you use it correctly. Treasuries can help keep money stable inside the system, but none of them can do everything at once. So instead of asking, where is the safest place to keep all my money, you should ask a better question. What job do I need my money to do? Think of your money in parts. One part is for daily life. One part is for emergencies. One part is for protecting value. And one part is for backup if something breaks. When you split your money this way, you're not relying on just one system. If one system fails, the others can still work. And that is the real goal, not to predict the next crisis, but to make sure one problem cannot lock away everything you have. That is what real safety looks like. So what does this actually look like in real life? Let's keep it very simple. Imagine a normal person with savings. They do not need anything extreme. They just want to feel safe and ready. First, they keep some money in a regular bank account. This is for daily life, paying bills, using a card, and handling normal spending. Second, they keep a small amount of cash at home, not too much, just enough for a short emergency. This helps if systems go down for a few days. Third, they may keep a portion of their savings in something that protects value over time. This could be gold or other long-term assets, depending on what they understand and trust. Fourth, they avoid putting everything in one place, not all in one bank, not all in cash, not all in crypto. The goal is balance. They are not trying to guess the future. They are just making sure that if one system fails, they still have other ways to access and protect their money safely. So here is the one thing to remember. If banks shut down, the biggest risk is not always losing your money. It is losing access to it when you need it most. That is why putting everything in one place is never truly safe. The smartest move is simple. Spread your money across different places, so each part can do a different job. That way, if one system stops working, the others are still there for you. Because in the end, Real safety is not about guessing the next crisis. It is about making sure no single problem can trap all your money. So here is the simple truth. If banks shut down, the biggest risk is not always losing your money. It is losing access to it when you need it most. That is why the smartest move is not to trust just one place. Spread your money across different systems so each part has a job. That way, no single failure can block everything you have. This is how you stay in control, no matter what happens next. If you found this helpful and want more simple, real-world money tips, make sure to subscribe and stay ahead of the game.